Hey everyone, me Kevin here. Welcome into another live stream podcast show. I'm super excited to be bringing in a fellow YouTuber and a safe money author and speaker, and Stephen Gardner, who's covered stimulus, money. We're going to talk insurance, the markets. We've got so much to talk about. Stephen and I, by the way, we've been texting probably this entire pandemic, just about all of the madness that has been going on. And I'm so honored to have him on the channel to really go deep on all of the things that have been going on, not just in the last year, but what we think about going forward. What's the future like? Thank you so much for being here, Stephen. So excited to have you.
Yeah, thanks, Kevin. I'm excited to be on. Yeah, like you said, we've been privately texting each other since I think June of 2020, just helping each other with YouTube, stimulus information, being, a true source of information for each of our communities. So I'm excited to be on with you today.
It's such an honor, man. So I want to start with, I want to ask you about, let's start with the market, and where is your head in this market? We've had a crazy last 30 days here because I know you focus on money, helping people build their wealth. What's your advice to folks today? And then of course we'll go into some other things.
Yeah, so it's hard to give financial advice to the masses because everybody just has such a different background. But and I'm sure you see this too, but you listen to one person that you really respect and they're like, this market is heating up and we're going into a boom. And then you listen to another one of your trusted experts and they're like, this thing's going to drop by 40 to 50% in 30 days, and it's like, how do you know who to really trust, right? So a few things just from being in the financial world for about 15 years now is we know the market's going to go up. We also know for a fact the market's going to go down. And so you just have to decide, what is your appetite for risk? What is the percentage of money that you should have in the stock market? How much should you have in real estate? How much should you have in safe money programs or alternatives? And, so each individual needs to decide for themselves. But as far as the market, it looks like with this new stimulus package kicking off and the focus being on getting back to where we were as far as unemployment numbers, average income per household, it does look like things are going to start heading in a positive direction for the market. And so as of right now, for me personally, the indicators are the market is going to go up, but it's probably not going to go up in every area. So that's the positive news. The thing that has me a little bit concerned is at some point, a stock is only worth what the company is actually bringing in as far as revenues and profits. And during this pandemic, there's been so many companies that people didn't know, they just didn't know where to put their money. And they would get like a stimulus check or they were able to keep their job or something. And so without having eating out, taking into your income, vacations eating into your income, the market continued to go up, which it really shouldn't have, in my opinion. And so now you have many companies that were all of a sudden overvalued, right? Like, for example, Tesla just had this absolute boom, and then they split and it boomed again, and then now it kind of came back. And now, as of this morning, Kathy Wood at ARK Invest, she's saying by 2025 it could go from 600 to 3,000. So all of the top people, they're always very optimistic about where the market is going, but they're also optimistic when the market is falling apart. And so again, you just have to take investment advice with a grain of salt and a little bit of humility, and just make decisions based on what you think is best for you. Some people I know in March, they got out before the market dropped. The market dropped, they went in, and then they've had like 200 or 300% increase on their money from just riding this V recovery back up. And I know other people, they rode it all the way down and they've now ridden it back up and they're okay. And I know other people that they rode it all the way to the bottom, got scared, went into cash, it went back up, and now they're buying at higher rates. So, it's just really interesting. Money is, for the most part, humans are very, very emotional when it comes to transactions with money. And so controlling your emotions, getting good education is really, really important.
Yeah, no kidding. So what do you mean when you say safe money? Like what can you talk about that a little bit? I'm not super familiar with the phrase. I mean, I like safe money, the concept of it.
Yeah. So most of my clientele, by the time they get to me, they've been through multiple market booms and busts, and they don't want to lose money anymore, and they don't want to babysit their money anymore, or they're at that age where they just really can't afford to lose money going into retirement. And so in the insurance world, you have variable products and you have fixed products. And by fixed, it means that the company will actually step in and they will contractually guarantee that you'll never lose money. And so if the market goes up, you get to ride that upside. If the market goes down, they put in these floors and they automatically protect you against losing money. And so when I'm working with an older clientele, maybe 55 and older, they're at that point where they're like, hey, I've done well in the market, and I've also, been in the corner sucking my thumb from my losses. I don't want to go through that again at my age. Or over 50% of my clients are very wealthy physicians, and they just don't have time to babysit the market. And so they would rather get a good rate of return and not have to manage their money versus trying to actively manage it just to get maybe 2 to 3% higher per year. And then in the banking insurance plans, again, the company steps in and says, if you die, we're going to take care of your family. And if you live, we're going to take care of you. But at no point are you going to lose any money. So when I say safe money, the safe money world, it's the insurance, right? Why do you have house insurance? Well, earthquakes, fires, burglaries, damage. I want to shift the risk from myself over to a much larger company and have that safety. So that's what I mean when I say the safe money world.
Gotcha. Okay, so that's interesting because I remember we briefly chatted about you saw my video with the Ladder Life Insurance CEO, and he's really bullish on like term life insurance, for example. Not so excited on whole life. Is this safe money thing? Does that relate to that? Is that kind of like a whole life thing, or maybe I'm connecting two totally different things here?
No. So anybody that's really excited about term life insurance makes an income from selling term life insurance, right?
Gotcha, okay.
Nobody wakes up and thinks, I want to buy some life insurance. That's like the sexiest thing I could do with my 24 hours, right? So, as I watched that interview, there was nothing wrong with what he was talking about term insurance. It is more affordable, and you get a larger amount of death benefit. But the reality that he didn't talk about is that the insurance companies know that 99 out of 100 people are going to live beyond the term of the contract, and the insurance company is going to be on the hook for $0 out, and they get to keep all of the dollars in. So it ends up being a good thing for them. It ends up being a good thing for people that own the term insurance as well. But there were some things that he said specifically regarding this concept of infinite banking or bank on yourself or be your own bank that I felt like he really did not represent well. In fact, there were a few things that I felt like he maybe purposely purported incorrectly in order to make term insurance sound better. And I'd be happy to go over some of those if you would like. But, I got into that particular concept with my own money before I even started educating other people on it. And now it only makes up like 5% of my income. So I'm like very, very passionate about it on a personal side, but as an income producer, it's not the main horse I have in the race. And so I feel very comfortable talking about it with people because I don't need the income that comes from it. I keep the income, but I don't need the income, right? So it's a good position to be in.
Yeah, that makes a lot of sense. And so, I do want to get into some of the nitty gritty. On a macro, you kind of started by mentioning that you think, we've got positive signs, market getting better. Are you worried about the Fed, for example? Are you worried about inflation, or any of these things going to cause issues for growing wealth here, in the next 5, 10, 15 years?
Yeah, I tend to be not a big. I don't have a lot of trust in the Federal Reserve. They're backed by very, very wealthy people, and they're not connected to the federal government. They purposely made their name the Fed so that people would think that they're related to the government. But they're a privately owned business that can manipulate money. I don't feel bad for them one bit, and yet they control 300 million Americans' lives. They control the global economy to a great extent. And there's tons of market manipulation from the Fed, and yet they're making so much money, but they make it look to the public as if they're doing all these favors and just barely squeaking by. So I don't have a lot of faith in the Fed. I believe Jerome Powell is a brilliant guy, but when he says that there's going to be no inflation, then why is the price of gas gone up $1 a gallon? Why did the price of meat and cheese and most of the groceries at the grocery store jump up? I know it had something to do with supply and demand, but how often do things go up and then come back down, right? They almost never do. I remember as we were finishing up with George Bush and moving into Obama, the price of gas was almost $4.50 a gallon. Right. And the price of food went up. All the restaurants had to raise their prices, and they all printed new menus. And guess what? When the price of gas came back down, nothing came back down. Right. They didn't lower that. They'd already printed the menus. Right. People were accustomed to paying the higher price. So they say, hey, we're going to control this. We're not going to let the price of goods and services go up by more than 2%. That's our indicator. It's already up by more than 2%. So I don't tend to fully believe the Federal Reserve.
So you're not tuning in for those Fed updates, in other words.
No, I mean, I do because I think that it affected stimulus. And but think about this, okay? Sorry, just sniffed a little too loud. So the market is tumbling in March, right? A year ago, just like this downward trend, and people are losing money. They're panicking. The Fed starts saying to Trump and on the news, oh my gosh, we're going to need a bailout in order to provide liquidity, right? And so the market drops, the Fed steps in, and they buy billions and billions of dollars of stocks and bonds at discounted prices, right? So that people can create liquidity. And then they go on the public news and they say, okay, we're going to make interest rates zero. We're hardly going to make any money as the Federal Reserve. BS, right? Then they ride this V-shaped recovery back up, and they're making billions upon billions as this market goes up. But nobody thinks or talks about that. All they talk about in the news is, gosh, thank goodness the federal bank is going to keep interest rates near zero, right? They made so much flipping money off of this pandemic. It's just gross.
Wow. Yeah. I mean, geez, it does seem a little bit like that's exactly kind of what happened over this last year, is that really the rich people or people making over $100,000, don't want to call a family making over 100K rich, but both, people already wealthy, people making over six figures, or maybe even more if you've got a family and many kids, they have really benefited if they were investing in either stocks or real estate or being sort of part of perhaps what the Fed has sort of created. Whereas everybody else, the people working hard every day for a living and they're barely getting by, making 20, 30, 40K a year, they got screwed in this.
Big time. Yeah, big time. I mean, it's unfortunate. I don't know what you and I could have done for these people other than give them good information, give them hope, remind them not to kill themselves, or let a temporary situation become a permanent decision. Like, I had to deal with that almost every day on my stimulus channel.
Really?
And I felt terrible.
That. Yeah, we would provide.
Yeah,
sorry,
I would text you like, hey, after you do a stimulus update, what does the rest of your day look like? Oh, I get ready for my next video and I spend some time with the family. And I would get all of these emails about like just desperation, like, oh, I don't know what to do. I lost my job. I'm thinking of killing myself. I mean, I can't tell you how many people I talked off a cliff. And it started to weigh on my soul to the point where I was like, God, I don't know what to do. And so my message became just like words of encouragement. Now I end every video by just reminding people that you're amazing. You can do hard things. You can get through this. It's just like, I feel for these people. I really do. And yet at the end of the day, I don't make enough money to provide for multiple families. And I started doing contests to try to help people with groceries and just good information. Hey, here's a resource. Here's the newest update. And so, I tried to be as helpful and transparent and honest with my community. But at the end of the day, neither you or I could get Nancy Pelosi to do anything. Neither you or I could get Mitch McConnell to do anything. We didn't have a direct line to President Trump. I tried sending letters and video letters and getting people to retweet and tweet. And I don't know that it mattered one bit, but I was at least going to go down trying for my community, right? So anyway, that's kind of where I was at, where it was like, gosh, the very best thing I can do for my community is just supply them with honest, up-to-date information.
Yeah, no, I think that's so wonderful, because I mean, think about how complicated all of this stuff, and it pisses me off in some sense, but how complicated the government made this over the last year. Like, why is it that, it's EIDL grants, EIDL loans, targeted EIDL, then there's the PPP, but the round 2 is different, and then there's unemployment, but then you've got like 5 different segments of that. It's a disaster. How are people who don't keep up on this stuff? I mean, like, imagine if we didn't have a journalist, or even us on YouTube, if we can put us in the same basket here for a moment. Like, how are people supposed to stay informed on this? Now, Biden says he's going to go do run the circuit and kind of educate people, but every one of his speeches doesn't really go into the nitty gritty. It's not like Biden's up there going, hey, y'all, listen, if you're, under this poverty level, you got to apply for this, this, and this. It's so hard to get all the info you need.
Yeah. It's, sadly, I feel like the 1.9 trillion, it doesn't really solve poverty, right? Like, it's being pitched as the greatest redistribution of wealth, or the greatest lifter out of poverty in the last 50 years. And yet when the stimulus check is gone, you're right back to where you were. So I don't know that it fulfills the dream that Biden or Harris has. It certainly helps. Getting back to work is going to be, I think, the greatest tool. These states reopening safely. Utah's been open since May, so I don't feel the same anxiety and pressure that other parts of the country feel. And in fact, I try my best to have empathy for my listeners in New York. But at the end of the day, I don't know what it's like to be locked down in New York. I'm not locked down in Utah. I don't know what it's like to have my job ripped away from me. I saw a major dip in my income when the pandemic started, and then I just hustled like crazy to find new sources of income. And because of being a business owner, I was able to get access to some of those government programs that other people weren't able to. So yeah, it was not perfectly executed. I mean, not even near perfectly executed. There was so much waste in the PPP program. There was probably maybe the EIDL should have been structured differently. The thing that is kind of scary for me is almost every business had to go into greater debt to survive.
No.
And that debt makes running any business hard. And so, and then on top of that, you had a lot of citizens that went into significant amounts of debt in order to survive this pandemic. And so, on my channel, I talk about, the importance of building assets, having assets, income producing assets, but at the same time, not carrying bad debt, right? And then educating people on the difference between good debt and bad debt. And so, but yeah, when it comes to the stimulus information, I tried to give the most honest information, but there were times where I was like, why are they doing it this way? Or why aren't they thinking of it? I mean, I'm sure you had some of that as well, right?
Oh my gosh, yeah. And it makes you wonder, is it possible, do you think, that there may be a lot of folks from this this last year that might get jaded and might think, there's no way to win in this world because it's just it almost sometimes feels rigged against the people who are either crafting these programs. Is that a possible outcome of what we've seen here?
Yeah, it is. A few years ago, Robert Kiyosaki, the author of Rich Dad, Poor Dad, said the greatest risk going into the 21st century will be having a job. And I thought, having a job, that's really crazy, right?
Yeah.
But what I think he meant, and I've seen some of this now in my own life and community, is the business owners in America were given so much more of an advantage than the citizens. And so by not having a job, you had more control over your situation, right? By not having a job, you didn't have to worry about being fired. You maybe just had to reposition yourself, revamp, pivot. I call myself the master pivoter, right? Like I've had to pivot so many times in my career, but it's necessary. But I can see where people could become more jaded. And, this tour that Biden and Harris are on, according to Chuck Schumer, is to remind people what the government can do for them. Well, for me, that's a very scary thing because I don't want to be dependent on the government. I want to be independent, and I want the American dream to work for me. This opportunity to go out and work hard and make money. It does feel like we're in a rigged system, right? So let's go back to the stock market for a minute, because this is something that's always on my mind, right? And maybe you've given this some thought. If not, please chime in with your opinion. But okay, so on the one hand, we have big companies, right? Like Walmart, Amazon, these big companies, Tesla, Ford, you get the idea. But their CEOs are caught between a rock and a hard place, right? Because on one hand, they 100% work for the shareholders of the stock, right?
Right.
But they also have to manage employees that do all of the work. And so wages have not kept up with the growth of the stock market because there's been so much focus on squeezing every penny out of that next stock call so that they can look good to investors and Wall Street and Jim Cramer and, all of the investment banks out there. There's tremendous pressure to perform and be that CEO that gets every penny of growth for the stock. And yet at the same time, you now see that most people can't afford to feed their family or be a one income family. It's turned to a dual income family. And so there's a lot of disparity. So I think that's something that's going to have to be addressed sometime in the future. There's going to be a reckoning of why does Jeff Bezos get to be the richest man in the world while 18 to 20% of his employees can't afford to live where they live without a second job or a spouse or a partner that also has a job. So there's going to have to be a reckoning there at some point where they go, hey, listen, shareholders, you didn't put up any of the money that got this company going. You now are just buying into something that grows or sinks based on the headlines in the media and the profits that these other guys are producing by working their guts out, right? And so there's going to have to be some kind of shift, I think, in the way that people are paid, the way that profits are plowed back into companies versus always dished out to investors. I don't know what that answer is, but that's something that's been on my mind as far as the American dream, what it takes to raise a family in the United States, and the stock market. So I don't know if that's anything you've ever given any thought to.
Yeah, it's actually fascinating because, I mean, really what you're saying is almost in some way, you workers would have to, I mean, I guess that's why we have workers unions, but like if there were no workers anymore willing to work for $12 an hour or $14 an hour at, let's say, an Amazon facility, Amazon would be forced to raise wages. They'd be forced to. But we're almost stuck between this weird societal situation where it's like, yeah, but like I need a job right now, and the only thing I can get is a job maybe that pays $12 or $14 an hour, and that's tough. And so then it makes you wonder, okay, does it become government's role? Like, is it a minimum wage solution, or is it an education thing, which goes back to the government? You know, I mean, it's something you mentioned about a single earner versus a dual earner. And what your insight on this is, you know, if you go back to the 50s, single earner could run everything. You know, a single earner, you could have enough money for vacations and survival and everything. That's almost not possible anymore unless you've got somebody who's just coding their way to six figures plus. What's your take on all that?
Yeah, it has changed. It has changed. And again, I think it's something that has to be addressed, right? Like somebody on here, all things are relative, right? And perception is reality. So if I say to somebody, hey, if you become a coding expert, you can get a job at Google making $120,000 a year. And people in the Midwest or maybe a smaller town or something, they're like, oh my gosh, 120,000, that's life-changing money, right? Yeah. And then they move to Palo Alto or San Francisco or Walnut Grove or whatever, and they realize, okay, it's $5,000 or $6,000 to rent a piece of crap place to live. You know, like I start reading these stories of people that work at Google that make $100,000 and they live in a van, or they rent a bedroom for $1,000 a month. Like, wow, you know, wow. Same thing in New York, where it's like, it's become so expensive to live that nobody's living. All they're doing is working day in and day out. And that grind just starts to kill the human spirit. And it kills innovation and it kills dreams. And so again, I don't know what the answer is, but to say that things aren't different than they were 50 years ago is to be naive. Now, you know, you and I had to cover this whole, should the government force a $15 minimum wage with the stimulus bill? And, you know, I didn't know what the right answer with that is. I'm not in government. I don't have access to enough macroeconomics, but I know that minimum wage should be higher, right? I don't know what the right answer is. I know that pay should be higher for most jobs. So again, it brings me back to this stock thing, right? Where, okay, if Amazon or Walmart weren't taking in such tremendous profits, wouldn't they have more money to share with the people actually running their business? You know? So like it bothers me, right? And I'm not like a Bernie Sanders fan or anything like that, where the government should do everything for you. But at some point, I do think the government has to step in and say, okay, Walton family, how many more $100 billion do you need before your self-esteem's at 100%, you know? Meanwhile, I see people that, you know, they work at Walmart and they can't work there without also being on food stamps and Section 8 housing. And so there's something wrong, right? There is something broken, and it does feel rigged. And I think that people feel that, but don't know how to communicate it. I mean, I have a degree from the David Eccles School of Business at the University of Utah, and I still have a hard time finding the right words to describe what I'm feeling, right? So I don't know what the right answer is, but I do think that they're going to have to address that at some point, right? As like, at what point does the worker doing the work get paid more than the person who just put up the money? I don't know.
Right. Good point. So what do you recommend to people generally as like when they come to you and they say, hey, look, you know, maybe they're making 30, 40, 50K, and maybe you'd be better off setting up an average profile of who this person might be. But how does somebody who's, you know, got a job, got 2 jobs, trying to get by, struggling to get ahead, how do they join the other side of the K? Do they get into real estate, stocks, business? Do they earn more? You know, what's the solution for them? As much as we decry the government, you know, it's not going to change anytime soon. So what can somebody do today?
Yeah. Well, if somebody's making under $50,000 a year and they come to me, the first thing I look at isn't, hey, what percentage did your 401k earn this year, right? For me, that's kind of irrelevant. The first question I want to know is, what's your debt situation like, right? Because if I'm bringing in $50,000 a year, my margins become very tight for how much surplus income I have to work with on a monthly or an annual basis. So the only way to find more margin in your budget is to lower your bills or increase your income. So I ask the question, could you make more money? Yes, no, I've never explored it. Okay, how do we raise this side of the margin, right? And then what's your debt situation so that we can create more margin by lowering your bills or your debt payments. And most people are carrying negative they're carrying bad debt. So I will work through, you know, what's your bad debt situation? What's your good debt situation? Oh, am I here?
I think I lost Stephen there for a brief moment there.
Uh-oh.
Did I lose you, Stephen? I lost your audio there for a second.
Oh, no, I'm here.
Anyone here? Is it just me?
Uh-oh.
Did I lose you, or did everyone lose it? Can anybody else?
I don't know. I can see myself talking.
Oh, you hear him. I can't hear you. Okay, well then that's my fault.
Uh-oh. Okay.
One sec.
Okay. Because I know I can hear me listen to me. Hello.
Hello. No. Okay, hold on. I gotta figure this out. One sec. You know what, Stephen? I'm gonna let you take over for a second. Sorry.
I'm just gonna keep talking. Okay. So what I was saying to those that are still watching, all 6,500 of you, and make sure to give this video a like because Kevin is awesome, right? So what I was saying is the next thing that I like to look at with people is, are you renting or do you own, right? One of the greatest indicators of wealth is owning a home. And I know that homes have become very, very expensive now. In fact, I think the real estate market might be overheated, but there's still deals out there, and you have to have a place to live. And so I'll start looking at, where is your money going? How much is coming in? How much is going out? And I start to look at people's mortgage situation or their rent situation. And again, having a home is one of the best indicators of wealth down the road. Maybe not in the short term, but in the long run, having a mortgage will actually make your net worth go up. And there's tremendous wealth that can be built by owning real estate. And so getting rid of the bad debt, making sure you have good debt, and then understanding what are your actual goals when it comes to money. Because most people in the United States, if they work for a company that has a 401k, they get railroaded into a 401k. And then that 401k may be good or bad. It may not have very many investment options. It may have a match. It may not have a match. It may take money away from your, biweekly pay or your monthly pay. So that's also something that we look into is where are you placing your money? Is it in a brokerage account? Is it in an IRA? Is it in a Roth? Is it in a 401k? And then we get really clear about people's goals. And once people understand what their own goals are with money, because when it comes to a 401k, the number one goal of a 401k is actually Wall Street's goal, which is to get money in that people will have tied up until age 59 and a half. So a 401k is very much to the advantage of Wall Street. Now, the one thing that I do like about a 401k is the match. In the world of money, there's like a hierarchy of money, right? So there's free money, then there's tax-free money, then there's taxable money, right? So if you're not grabbing that free money, then you're missing out. Like where else can you get a 100% return on your money? But anything that people are putting above and beyond that, I start to question because it really is building a larger tax burden for yourself and your family at retirement and also when you die, right? So those are a few things that I look at with people. And then from there, if we're doing paid coaching, if they want to go the stock market route, we can certainly talk about that. If they want to go the real estate route, we can talk about that. If they want to do the infinite banking or a growth focused annuity account with an IRA or a 401k, we can talk about that. So I don't personally ever try to have a one size fits all with people, or you have to go down this path in order to work with me. I like to really leave it up to the person, but after we go through some self-discovery and some education so that they can then make the best decision for them. Because if you just take a new job and you get a 401k, the question is, why did you do that? Well, that's what the company told me to do. And that's not really a great investment strategy, right? The HR department told me to do this. If that's your strategy, you need to be watching me and Meet Kevin just a little bit more.
You know what killed me about the 401 and is I realized that you put your money into a 401k, then it grows. You get the tax break up front to pay the taxes later, but then you're investing in, let's say you put it all into Tesla stock, right? You put it all into Tesla stock in your 401k. When you go to retire, you're paying ordinary income taxes on that, which in California could be like, depending on how much money you're making out of that, it could be a lot of money, 40, 50% in some cases. When you are just investing into the stock itself, you get the benefit of long-term capital gains where you're paying, maybe 15, 20, 25% less, depending on, I suppose, which state you're in. And so it really made me question, like, wait a minute, why are these 401s so popular? Is that one of the things that bothered you about it?
The biggest thing that bothers me about a 401k is that it puts your money into prison until you're 59 and a half.
There's the other thing. Yeah, good point.
Well, and that's okay. That's okay for a lot of people, right? You and I are not good W-2 employees. At least I'm not. Like, I'm a terrible employee. I'm so independent. I'm so I think outside of the box. I don't work at normal hours, and I know it might drive my wife crazy, but there's times I come down to my office at 11 o'clock at night and I just start working, and she's like, "What are you doing?" And I'm like, "The ideas are here now. They weren't here at 4 o'clock." And so yeah. I'm a terrible employee that way, right? But here's a good example, right? The market starts going to hell in a handbasket, and people need access to money because they've been fired and they're not going to get unemployment for 9 to 12 weeks, right? And then people want to access their 401k and they're like, oh, yeah, no, you can 100% access that. You just have to take a 30% loss on your money.
Yeah.
And so then the government was like, okay, ooh, gosh, let's waive the 10% penalty, and then people only have to take a 20% loss. Like, why should I have to take any loss? It's my money, right? So for me, locking your money up for decades makes a lot of sense to Wall Street, maybe not a lot of sense to the individual. And then the second thing that bugs me is the future tax burden. You know, you're always sold on this idea of taxes will be lower when you retire. And I just almost never find that to be true, especially for people that have money, right?
Yeah.
If you don't have any money, then you aren't going to be in a higher tax bracket. If you do, you are going to be in a higher tax bracket. And guess what? When people retired 10 years ago and the government had like $18 trillion in debt, now they've got almost 28 trillion in debt. At some point, they're going to have to raise the taxes. And guess where they're going to get a lot of that tax money from? From your 401k and your IRA, right? So,
yeah, I mean, think about it. Those ordinary income taxes. Biden, Biden's recently been talking about even raising the taxes for many different folks. I know he's got different income criteria and that, but yeah, you're right. I mean, that's a possibility, huh?
Yeah, and you know, there's also, if you get in bed, here's another thing that really bothers me, right? Is now, you know, you do contracts and partnerships. I do those too, but I'm very, very, very picky about who I partner with on any kind of deal, right? Who you get into bed with is really important in marriage and business, right? But think about this. If you get into a contract for a 401k with the government, what's to stop the government from deciding how much of your money they want 20 years from now?
Wow, that's a good point.
Okay. Let's say 20 years from now, it's the year 2041. You've got $1 million, and Uncle Sam says, I think I deserve 70% of your money in the form of tax. There's literally nothing you could do about it. It's the government. They can take it. They can change the rules at any time, right?
That's a really good point, because
yeah, to me, that's a really scary thing.
Yeah, that I mean, we didn't have an income tax. I mean, the income tax is what, maybe 90 years old, 80 years old now. I don't know the exact dates of the history, but I mean, it's only really been this invention of the last 100 years in the United States. And so we look to past to say, oh yeah, well, no, it won't be the same. But no, I mean, it's constantly been going up over time. So why wouldn't it keep going? That's interesting. I hadn't even thought about it that way. That's a good point.
Yeah, well, and here's another thing, and this did apply to people that made higher income, but after World War II, the top tax bracket was over 90%.
Oh, wow.
Okay.
Okay, tell me more.
Yeah. Somebody asked Ronald Reagan, Mr. Reagan, why do you only make 2 movies a year? And he said, well, I get paid about $100,000 per movie, right? If I make the 3rd movie, every dollar I make, I have to give 92 pennies to the government. So I have no incentive to work because they're literally penalizing me for being successful, right? And so the reason that they raised the top federal tax bracket to over 90% is they had to pay for World War II, right? And so we've been in these really, really low taxes. And trust me, when I pay high taxes, it irritates me. But we're not even near where they could be or where they might go, right? And so anyway, it's just something to think about, right? Like whenever I talk about 401ks on my channel, I get like 50%, oh, that makes a lot of sense. And 50%, you're a total moron. Why would anyone ever listen to Stephen Gardner, right? And so, but it is a great question. If I'm in a contract with a 401k with the government, 10 years from now, 20 years from now, who gets to decide how much of my 401k they own? And the answer is not you. It's not you.
That's a good point. Wow. So in that case, do you, I mean, I love the idea of seeing how could somebody raise their income. I want to ask you though, how many people that are coming to you hear that question and think, well, I guess I could. I guess I could get a license. I guess I could get this education or whatever to make more money? Or what kind of answers do you get?
Usually it's, I don't know, right?
Hmm.
And
Have
so
they
then that's
not
when
thought about it, or?
no, I think that most people in their minds have a ceiling on how much they can make. I know I used to.
Ah,
Okay.
okay.
So here's a great question that I like to ask people, and it's just
Sure.
theoretical. It gets the wheels turning in your mind, right? What would it be like to make double what you make right now? And most people's first answer is, I could never make that. I could never double my income. And it's like, why? Why couldn't you double your income? Because I don't know how, or I've never seen it done, or I've never done it. And it's like, okay, but what would it be like to double your income? Or what would it be like to add an extra $10,000 a year to your income? It really irritates their brain to have these questions asked, right? But then I tell them, listen, if you can't even imagine having more money in your imagination, how's it ever going to manifest in reality?
It's a really good point. So really, when you ask the question, what's it like to, what would it be like to double your money? That's almost so abstract that it's like, oh my gosh, I've never even considered doubling. Like, I'm trying to get a raise of 5%, doubling. Like, oh my goodness, is it really that almost kind of just like wake up of a shock, huh?
Yeah, it's almost like asking people, what would it be like to be a dinosaur? Like, I mean, it's like their brains sometimes are like, whoa, wait a minute. Okay, so now imagine this, right? Imagine that you were raised in a low income household, or a single parent household, and you never saw mom and dad, or mom or dad earn more than X amount of dollars. That gets recorded in a child's mind, right? And then as they grow
Yeah.
up, they start to put limitations on what they can earn. And my job, I feel, is to say, how do we remove those limitations and allow your mind to think just a little bit bigger, right? And it doesn't have to be double your income, but if somebody could go from 50,000 a year to $60,000 a year, for that person, that's usually life-changing money. But their brain
Yeah.
doesn't know how to be open to the idea until somebody starts pushing those irritation buttons.
Huh.
But I had that too. You know, when I first got married, I should have never gotten married. I was making $9 an hour when I got married, right? And I can't believe my wife put up with it. And at some point, it was like, man, if I could make $40,000 a year, I'd be made in the shade, baby. I'd be great, right? And then I made that, and it was like, oh man, what if I could make 70,000 a year? And it was like such a stretch for my mind. And it was like, okay, so I thought to myself, okay, one of my mentors was a guy by the name of Jim Rohn, and he used to say, you can have more if you become more. And I was like, okay, I've
Ah,
got to get more skills. I've got to get more education. I've got to get a greater network of people. I might have to shift to a different industry that pays better, right? And so as I became more, I got more, and then I got smart about keeping more. And so for me, it was so much about just education and trusting
hmm.
myself. But I had to remove the ceiling in my mind and allow it to start thinking bigger, right? And I remember the first time I made over $100,000. I literally, like, I was like, oh my gosh, how did I do this? You know, like, my dad never made a lot of money. He was a great dad, but he never made a lot of money. So it wasn't modeled to me about how to
Right.
be a high income earner. And I wasn't a doctor. I wasn't like a lawyer. Like, I shouldn't have made this kind of money, right? But I had a marketable skill in that I was good at sales, and I was good at relationships. And I started crafting those skills and getting better. But you have to unleash your mind. So, you know, I don't know what the average income is in your community, But it's an interesting thought exercise. What would life be like today if you doubled your income? And the answer is it would probably be better. And the second answer is, okay, now how do I do that? I don't need to double my income this year. Most people can't double their income in a year, but it's not impossible. It's been done. But if you can't even imagine it in your imagination, how's it going to show up in your reality?
That's such a good point. I mean, so really, so one of your first things is, hey, how can we make more money? And then do you sort of let people kind of branch into their own directions from there, like retirement accounts, stocks, real estate, business, or is there a general rule of thumb that, hey, look, make more money, get educated, make more money, and then buy a house and then stocks, or is there like any general rule of thumb that you like to use?
Well, here's a good question. Do you work for a company that's making profits? And if they say yes, then I say, when's the last time you asked for a raise? And they said, oh, never. I'm waiting for the company. And I said, the company never thinks about how to give you more money. So if you work for a company that is profitable and you feel like you work hard to bring in some of those profits, then you need to go to the company and say, here's the reasons why I believe I deserve a raise, or what skills could I go acquire for the company that would justify giving me a raise? If you're working for a company that's making money, it means they have money that they could be sharing with you. You just haven't gone out and asked for it. The other question is, if you genuinely feel like you've tapped out on your income potential with this company, then why don't you jump to a different company in your same industry? And they're like, oh no, I have friends here, or my personality is that I'm loyal. Okay, well, when are you going to be loyal to you and your family? Aren't you deserving of the income that you should be making, right? Now, that doesn't mean that someone flipping burgers making $10 an hour can suddenly demand making $20 an hour. The market doesn't work by demand, right? So you have to be willing to ask, but you have to have the skill set to back up that demand, right? Okay, could I become the night manager? Could I become a shift manager? Could I go to a different business? Could I jump from Burger King to Wendy's or Chick-fil-A and, or whatever it is? Hey, I work for a trucking company and I make $50,000 a year and I've been doing it for 15 years. But if I jump to the competitor, I can make $57,000 a year, right? And then two things are going to happen. You're either going to jump to the next company and make $57,000 a year, or the company you've been working for 15 years is going to say, it's going to cost more money to replace you, and we really like you, and you do add to the bottom line. Here's a raise, and maybe it's 7,000, maybe it's 5, I don't know, right? But unless you have the skills and you demand that you earn more money, nobody is looking out for you.
Wow.
And I was just gonna say that it's not selfish. It's not selfish to demand that you get paid for the work that you bring to a company. The companies make us believe that. Society makes us believe that. But I can tell you right now, I'm not going to work for a company to build their empire 60 hours a week to be paid peanuts. I'm not going to do it.
Do you think that for most folks, it is a good idea to be W-2, sort of have a job and kind of bounce around and then grow their investments? Or do you think, it makes sense to look into self-employment for many people? Or have you found sort of the right path there, or a consistent path?
I think the majority of humans are not entrepreneurs. And they don't have, and nobody be offended by this, but most people don't have the skill set or the determination or the stick-to-itiveness required to get a business up and running. And that's okay. Like, you don't have to feel bad about that. Like, I don't feel bad that I'm a bad employee. But most people, like, I'll have people come and they'll take me out to lunch and they'll say, okay, do you think I should start my own business? And I say, can you go 6 months without a paycheck? And they go, oh gosh, no. And I go, then you're not ready. You're not
Wow.
ready, right? And so you have to be willing to put up the sacrifice. Maybe you save the money before you quit your job and start something. But so I don't think most people are equipped to be an entrepreneur, but I think everybody listening to this should have a side income.
Ah, interesting. So side income from some form of investment or like a second job, like a side hustle.
Yeah, some kind of a home-based business, something you're selling, something that you're doing in your spare time. Everybody should have a second form of income. I genuinely believe that, right? And who knows, that side thing may become your full-time thing, right? Like when I was an employee, again, Jim Rohn, I'll give him the credit for this. He said on one of his tapes, he said, who says you can't work full-time on your job and part-time on your fortune? And I was like, oh, wait a minute.
Wow.
I could start a side business while working for a physician staffing company, which is what I was doing at the time. And then at some point, maybe this side thing will make enough money that I could do that full time, right? And that's what happened for me is my side thing blossomed and became my full-time thing. Now, I took a pay cut to do my thing, but guess what? I was willing to do it because I was happier and I was my own boss, right? But I didn't just like rip off the Band-Aid, screw corporate America. I had a family with kids, right? Like I had to do it systematically, but who says you can't work full-time on your job and part-time on your fortune? And maybe that small thing will blossom into something bigger and better. At least it did for me.
That's so amazing. And now this for YouTube for you, is this like another side thing? So did you kind of have like my job turned into a side thing and then you had another side thing because now your side thing was your main thing and let's do YouTube. But now this has turned into something incredible, right?
Yeah, this has kind of become my main thing, right? And I had no idea. A year ago today, I was not going to be like the big guy on YouTube. You know what I mean? And there's still a lot of growth that needs to happen in my channel, and I'm committed to it. But it's one source of income for me. But I did really well in the independent publishing space. And so I thought, okay, if I could do well in one space, would it translate into the broadcasting space, right? And my father-in-law used to joke, you've got a face for radio, right? Teasing me about my looks. And, so I've been on YouTube for 12 years, right? And
well, wait a minute. Everybody calls you Clark Kent. Come on, man. That's a great compliment.
No, I know I'm a decent looking guy, right? Like I'm no Abercrombie model or I don't even know. I'm not into brand names, but anyway, I know I'm decent looking. But you know what I think I'm really good at is taking complex things and simplifying them, and then doing it in a story. I think I'm a pretty good storyteller, and So, but oh shoot, I forgot where I was going with that.
Oh yeah. Well, how about how YouTube has now, how there's growth for your YouTube?
Oh yes, yeah. I also have ADD. So I just thought, okay, I've been on YouTube for 12 years, right? Like my YouTube channel is older than my oldest child, but
wow.
I had to just figure it out, and I never gave up, right? Like I've been sticking to this thing for 12 years, and then I was able to ride this incredible roller coaster. And this last year has been like being strapped to a rocket. Like I never thought that I would get to 930,000 subscribers. Wow. And yet every day I'm committed to bringing them the most up-to-date, honest information that I can. And there's me. That was an old video. You can tell by my haircut how old the video is.
Awesome, though. I mean, yeah, you've been grinding here, really just for quite a while, And
Yeah.
I mean, you've blown up here recently. What's that been like? And look, here's kind of a podcast-ish setup.
Yeah, I used to do a radio show, and I've done so many podcasts and radio interviews. I can't even keep track of how many it's been, but I enjoy it. I enjoy educating people and sharing information. It doesn't mean that what I do is a fit for everybody, but people have to decide after they're educated: is this for me or is it not for me? And I'm a no pressure guy. This stuff either makes sense and people move forward, or they don't, and we part ways as friends. Like, I don't have any need to pressure people into my philosophy of money.
Wow. So have you noticed that, like, an uptick in the people who will watch, which I just realized, I'm just looking at this now, like, I totally thought I've been subscribed to you. I just subscribed and hit the bell because I just type your name into the search bar. So it's official now. So make sure to subscribe to Stephen Gardner.
Everybody go subscribe to Stephen Gardner.
Have you noticed
folks? Go ahead. Sorry.
It's fine. Have you noticed people coming for stimulus and then trends, coming over to your website, your blog, and consuming your books and your financial content? Like, how is that? Is that happening? And then are you noticing a difference? Like, are these different individuals with different problems than what you've previously had?
Yeah, I've had to pivot and morph my business over 2020. So around June or so, I was doing the financial coaching. People would pay me to help them with their money, their debt, their business, or whatever. And it got to the point where I was like, I was working 14 hours a day. I was exhausted. I wasn't seeing the family. And so I had to cut that portion out of my business completely. And that was really hard for me to do because I get a lot of satisfaction out of helping somebody turn their financial situation around. But I had to cut that out, unfortunately. And then same thing with the growth focus plans that I do and the banking life insurance plans. Those had to kind of go on the back burner to the point where I was only maybe taking on one new client a month because I was just so busy with everything else, writing scripts, the videos, the research, and so I've had to morph my own business over time. And now YouTube is the thing that sucks up the most of my time. But I love it. I enjoy it. And every now and then I'll take on a new client. But over 60,000 people downloaded my book, Taming Wall Street. And it got to the point, Kevin, where I had to take my phone number and my email off of my own website because I was getting hundreds and hundreds of emails a day to work with me. And I was like, I told my wife, like, oh my gosh, I feel so bad. Like, I know I can help these people, but I don't have enough time. I don't have enough time. And, so it was hard. It's been hard for me to walk away from some of that. But, there's only one of me. And if 60,000 people want to read your book or work with you on an individual basis, it's like, it was interesting. I'll just use that word. It was interesting. And I had to really emotionally wrestle with, where do I put my time? Because I have to be conscious of my time. I get asked to do collaborations and interviews regularly, and I usually have to say no. And it's nothing personal against the people. It's just, I'm busy.
Yeah, no kidding. Well, golly, so, I mean, this is incredible. So, what do you see? I mean, for people, getting into, here we are. What is this? March 20th. We're basically at a year's anniversary of the bottom of the market from 2020. I know you don't trust the Fed. Do you? But you're optimistic on this next decade. Can those two coexist? And is there hope for investing here in this next decade?
Yeah, something I say with my clients a lot is, can you control the U.S. economy? And the answer is
Yeah.
always no. I know it's going to be no. It's kind of a leading question, but it has a purpose. And then I ask them, with the right financial education, could you control your household economy? And then most of them say yes, but I don't know how. And that's where I think financial education is so important, is you don't know what you don't know. But once you know things and you can start to be disciplined and make good money decisions, now you can control your household economy. And that's where, if all households were focused on improving their own economy, the whole economy would be better, right? But
Ah.
we're not. We're distracted by iPhones and movies and the easier things in life. But almost everybody I work with, at some point the light bulb goes on and they're like, oh, okay. So, like, for example, my brother-in-law, he texted me about a week ago about, like, should I buy some silver? Which dividend stocks would you recommend? Which high growth stocks would you recommend? And I was like, yes, let's sit down and let's talk about this. And he said, he's, I think, almost 37. Had to think there for just a second. Almost 37. And he said, for the first time in my life, it's become fun to watch my bank account go up, right?
Ah.
Because he's suddenly become a good saver. He and his wife are saving money like crazy, where before they were caught up in this being a consumer. And there has to be a balance between being an Ebenezer Scrooge that won't even put one additional piece of coal in because it costs money, and then spending everything you make, right? There has to be a balance. Living the middle road is usually the best. So, but anyway, yeah. So it's been fun to be a part of people's journey as the light bulb goes on for them. But it's a different light bulb for everybody, right? And again, I work with people where they're like, okay, I really like your philosophy on dividend paying stocks. Whether that stock goes up or down, as long as the company's
Sure.
profitable, I get a dividend, right? And they're probably a more conservative investor. Then I talk with people that are like, I want the Teslas. I want the companies that are in the media. And I'm like, okay, well, you just have to know when to buy, and be prepared to hold. And then we talk about their insurance. We talk about their debt. For some people, they are just like chomping at the bit, eager to get into the stock market, and yet they've got $10,000 of credit card debt at 28% interest. And so I just have to have this come to Jesus moment with them and say, okay, does it make sense to earn 5 or 6% on your new money, or does it make sense to pay off your old debt that's costing you 28%? So, and sometimes the answer is it makes sense to do both, right? And then we just formulate a plan to get through the situation as fast as possible for them. So anyway, it's something that I really enjoy. But again, it's hard to give advice to the masses because everybody just has such a different take on money. They're in such a different situation. But anyway, those are some of the paths that I go down with people as they work with me.
Are you noticing, or do you notice, those that you work with, is it possible for people to sort of delay that gratification of, I want to have, let's say, the Tesla car, I want to have the new clothing, I want to have the new computer, and get excited about investing? And has that changed over this last year? Has it been easier to convince people to invest recently than maybe before this last year?
I think it's been easier to convince people to get out of debt than to invest. Yeah.
Wow.
That was kind of shocking to me. I think that people realized, wait a minute, I need an emergency fund. I need liquid access to my money. I think a lot of people have had to rethink a 401k. And at the same time, 401ks have been booming as the economy rebounds. And so, some of what I teach falls on deaf ears, and that's okay. The truth is, your 401k is not most likely going to see the growth every year that we had this year. It's been a tremendous year as the economy has bounced back. But I also know the stock market drops about every 3 to 5 years, and then it takes a couple of years to get back to break even. And so then people just have to know, okay, what's my appetite for risk, and what's my goals, what's my time frame. So it really is an individual thing. But yeah, I would say there's great interest in investing, more than I've seen over the last decade doing what I do. It's greater than I've ever seen. But I also think being a good saver and not having bad debt has also been a trend that I've noticed with people I'm talking to anyway.
Do you get a lot of folks with a lot of real estate debt that they're nervous about, or is it mostly that consumer debt?
Yeah, most people aren't too concerned about real estate debt. If it's a primary residence, you got to have a place to live. And if it's an investment property, then, make sure that you're cash flowing, that you have good renters, that you have some money, emergency money in case they can't pay rent, like a lot of people have found themselves in this last year. So with real estate, not as much. I consider real estate a good debt as long as the numbers made sense when you bought the property. Most people in real estate don't realize the money is made when you buy the property, not when you sell it, right?
Yes. Yeah, good point. So, okay, then what do you get? How's your transition going to work here in the event of this sort of declining views potentially on stimulus? How are we going to get your message out there without context around people looking for help, which they're doing a lot of right now? Do you think we're going to still have a lot of people looking for that financial help on YouTube? And I mean, your insights are great. I think people can learn a lot from you. Can you speak to that a little bit and some of the things you're thinking?
Yeah, I'm honestly not too worried about it. Whenever you see your views decline on YouTube, it's a punch in the gut. But I know one thing about me is I don't give up very easily.
Nice.
It takes a lot to. I mean, I've been knocked down many times, and the secret is to always get back up, right? And
Nice.
So even if it takes me another 12 years of growing my YouTube channel, I'm committed to it. Like I'm not worried about it. One reason I refused to do clickbait during this whole thing was I'm playing the long game. I'm about building trust. I'm about education. And if people like the way that I present information, then they're going to subscribe and stick around. And if they don't and they leave, that's okay. I don't want anybody to stay that doesn't want to hear, the way that I present, So I've also been okay with losing subscribers. Now I don't lose subscribers faster than I gain them, but I know that what I do or my philosophy is not for everybody. And I'm okay with that. Like one of the things that has really got me excited lately is a couple of times a week, I'll present a really crazy story. And let me tell you, those videos bring me 100 times more joy than doing a money video. I don't know why. I just as I write the script, I work by myself in this office with a closet and an American flag and a few hats. There's nothing fancy about my office, but I'll be in my office writing my script, and I find myself giggling and smacking my head oh my gosh, why would Burger King say that? Or how did Amazon not catch this? I just find myself laughing. So there's a lot of joy that comes. And if it only gets 25,000 or 100,000 views, I'm okay with that. It's fine. I'm committed to my channel and my community. And again, if people don't want to stick around, that's okay. I want the people that want to be in my community.
How do you deal with politics and the politics that goes into stimulus? Sometimes it can get, you could be covering the news, and oftentimes it seems like people hear what they want to hear. Like, sound like a Democrat, I'm gonna unsubscribe. Sound like a Republican, gonna unsubscribe. Right? How do you deal with that?
I committed to just trying to be as close to down the middle as I could. I'm not like a big fan of politics. I find politics to be very gross. I think that there's corruption on both sides and in both parties. But yeah, the stimulus made me have to talk about politics. And so as I would write out my script for my stimulus update, I would say, okay, I've talked about the Republicans here now. I need to bring in something about the Democrats. Or man, I feel like I had to blast Nancy Pelosi. I better equally blast Mitch McConnell, right? So I tried to be as balanced as I could. I think the thing that was really hard, and you probably felt this too, was both parties were running so many YouTube ads leading up to the election that if I said the word Donald Trump, then they ran a Donald Trump ad and people would be like, screw you, mother effer. I hate that guy, you know? And I'm like, I don't control the ads, right? Or I would say the word Joe Biden and people would be like, that crazy old man, I'm unsubscribing. And I'm like, I didn't say anything. Like I didn't. So like even the ads that YouTube chooses to run on my channel were getting me in trouble with opposing views, right? And so I just tried to, I think it was easier for me to take the middle road because I don't like either side very much. But that doesn't mean that I wouldn't have an opinion, right? There were things that I'm like, okay, Mitch McConnell, why are you doing it this way? Or why are Nancy Pelosi, just sign the deal, right? Or Steve Mnuchin, come on, you're an Ivy League educated person, just pull the trigger, right? So
right,
it became pretty frustrating, right? And I'm sure there were days I would tell my wife, like, there's just bad news today. I hate being the guy that shares bad news. I hate it. I don't even want to do this update. And she would say, you got to do your update. And if people shoot the messenger, that's on them. But you're just trying to deliver good information. And so I would do the update. But yeah, if you don't build a Republican only channel or a Democrat only channel, then the discussing politics becomes very difficult. So I've tried to keep the focus on money and the people versus the politics.
I think that's a great way to do it. Speaking of money, what's your take on Bitcoin?
Well, I own some. Nice. Bitcoin is a mystery to me because at the end of the day, it has no intrinsic value. It's worth zero, but it's trading at around $58,000 or $59,000 because the people believe it's worth that. So it's not quite a fiat currency because it can't really be manipulated and it's very, very trackable. And yet at the end of the day, there's nothing really behind it. So it's kind of a mystery to me, and some people might disagree with what I just said, and that's okay. But I do own some. I do think that there's money to be made with Bitcoin. But when I hear people say Bitcoin to 1 million, I just think, what's behind that valuation? How does it get to 1 million other than people losing faith in the U.S. government and the Federal Reserve and stacking money in something that the people control? But at the same time, the Federal Reserve is not going to be overshadowed by digital currency without a fight. And so it does make me a little bit nervous about government regulation. How much goods and services can you really buy with Bitcoin? I think the big game changer with Bitcoin was fractional ownership, right? Through Robinhood or Webull or some of these other platforms where you could buy a fraction of a coin. Because let's be honest, how many average Americans have $58,000 laying around to buy one digital coin? The answer is most of them do not, right? And so without fractional ownership in digital currency, most people couldn't afford it. So do I have some? Yes. Is it where I'm placing all of my money? Absolutely not. So I will say this.
Your money?
Well, I have the majority of mine in the insurance programs that I work with. I'm a big believer in those, but I do have, when it comes to like money in the stock market, I think I have 17% of my money in Bitcoin, and the other, what would that be? 83% is in dividend paying stocks. I used to have quite a bit in Tesla, but when I saw it hit, I think it was like 880 or something, I said, I'm going to sell. And then it kind of, cascaded back down to like 660 or something. And I was like, I'm a genius.
Caused this. You caused this plummet.
I don't know. Well, I know this. Okay, here's another thing that worries me about Bitcoin is if Bitcoin can only survive based on big companies and celebrities promoting it, then that also worries me, right? Like this last big jump came from Elon Musk putting Tesla's reserve money into Bitcoin. That's where the big jump really happened, right? And I read the other day that Elon Musk made more money on that Bitcoin move than on Tesla for the whole year. And so that's kind of worrisome to me because they can put money in, they can take money out, right? So you saw this big jump, and then 2 weeks later, Elon Musk goes, I think Bitcoin might be overvalued, and it dropped down to like 43,000 or something like that. And I ended up losing money on it. And I was like, shut up, Elon Musk, just be quiet. So, but I do think that more countries and more companies are going to put some of their reserve dollars into Bitcoin, and that will see it run up to maybe 70 to 100,000. Once it hits that, I think it will be a little bit slower. I think it'll either go up or we'll see it pull back big time. If Bitcoin pulls back big time, I might actually go really heavy into Bitcoin. But right now, I'm too nervous to go heavy into Bitcoin.
You're 17% in. I mean, that you're like 4x what I am. I think I'm like 3% or something like that in. It seems like you're already pretty dang bullish. So how high would you go?
Well, I only have money in there that I'm comfortable losing 100% of. So if I lost that money, it would hurt, but it wouldn't devastate me, right? But so if it goes up, I'm like, great, it's another one of my performing assets. But if it drops, then I think I will go heavy, like big money into Bitcoin and write it up. If I can get to a year and get that capital gains, then I think I would cash out again. So I don't know. I'm kind of watching it. I do think that Bitcoin is going to disrupt the gold industry, and so I'm not getting into any gold right now. But so it's weird because I'm a very conservative investor, like very, very conservative. But when it came to Bitcoin, I was willing to go a little bit more aggressive. But I'm also just keeping an eye on it. A lot of my Bitcoin purchases have come at like midnight where I'm like, hey, the market's kind of down. I'll go into Bitcoin. So that's one thing I like is that I can buy Bitcoin at midnight,
True. That is something that is pretty neat about it. I want to know, do you think that this coming inflation is going to really push Bitcoin? Is that what's going to make people get even more frustrated with the idea of government's control of currency while there is so much printing going on? Is that one of the reasons you're getting in, or why buy Bitcoin, and how's inflation going to affect it?
Yeah, no, for me, it's more the thing that I like about Bitcoin is it's very hard to manipulate. Anytime something happens on the blockchain, like 20 to 100 computers have to verify that transaction's allowed and that it's true, and then it codes into the blockchain, right? Where right now, you and I both know the government just passed $1.9 trillion some of that money's finding its way back to government pockets. I mean, there's corruption in the U.S. government, right? I remember during the Bush years, it was Rumsfeld. He came out publicly and said during the war in the Middle East, the U.S. military budget can't account for $2 trillion. It's like, what? The government lost $2 trillion? Give me a break, right? So, and, Donald Trump pointed out just how much money in these stimulus bills was going to other countries and programs that then, that money finds its way back. So I don't know. I can't prove any of the corruption, but I know it exists. And with the Bitcoin, the reason why I don't think that the government will want Bitcoin and that blockchain is everything is accounted for and everything's verified by thousands of different independent networks. So for me, I really like that, but I can also see how a government would not like that.
Okay, so do you think, maybe the Federal Reserve, they'll come out with their own, let's say, Fed coin, or some kind of, central bank-backed digital currency? Do you think they'll do that, or is that transparency potentially going to be an issue, or maybe they'll do it, but then have it be less transparent?
I think they'll do it to control the people, but they'll figure out a way to not control the government.
Oh my gosh, what a line. Come on, that's a quote right there.
Okay,
wow.
So here's an example. Here's an example, right? Hey, we're going to force you to buy Obamacare, but the politicians get different insurance, right? There's one example. Here's another example. It's illegal to spam call people. So you can't telemarket without permission. But the politicians, they can call you and text you for donations all day long and not get in trouble. All they have to do is write the rule and then write themselves out of the rule. They do it every single year. I don't care if you're a Democrat or a Republican. They do it all the time. They make special rules for themselves. So they'll do it. They'll do it with a digital currency at some point because it's a great way to track everything that you're doing. I mean, if a government knows how much you're spending, how much you're making, where you're spending your money, they can control the population really, really well. But they don't want those same controls and metrics of accountability on them.
That's funny. Yeah, I was just talking to the CEO of Voyager, and we were talking about how, one nice thing about Bitcoin is it's initially anonymous because it's just a wallet address. There's no name on it, right? But what happens as soon as the government wants to tax it? Well, then they want your wallet address, probably. I'm sure this will come. They get your wallet address. Well, great. Now they've linked your wallet address to your social security number, which is linked to your name, your date of birth, your address, and everything. Now they could literally have this infinite log of literally everywhere you're sending money to whom, when, and how much forever.
Yeah.
It's crazy.
No, that will come. That will come. The government doesn't like not having information about what you're doing, right? Like think about like the Capitol riot that happened in January, right? We then found out that the major credit card companies were releasing who was spending money in Washington, D.C. on that day. And then the phone companies were saying, hey, we're able to go back and retroactively ping all of these cell phones to see who was in the area. And then they could cross the two over. They could look at travel logs. They could pull in who stayed at what hotel, who bought food at what area at what time, and they could start piecing together who was in the area.
Wow. That's kind of scary.
Yeah, they're not crazy.
Yeah, somebody, and I don't know exactly how this works, but somebody mentioned this, and I thought it was very, very fascinating. Somebody said that, and I can't believe it, but somebody said that the government is not allowed to spy on the contents of your email, maybe without a warrant, but they can track to whom you've sent emails to, from what IP address, to which IP address, the time, and all of this other metadata, to where essentially they don't even need to know what's in your email anymore. Their computers can fill in the blank.
Yeah, I mean, everything is about control. So, I mean, again, it comes back to the question you asked like 20 minutes ago. Does this dishearten people because they know it's rigged? I would say yes, but at the same time, this is the world we live in. So then how do you operate within this world? It doesn't mean you have to 100% accept it. You can push back on it, but at some point you can only push back so much, right? Like I can't even imagine what it was like to live in Germany during the building up of the World War, where it was like, hey, if you don't do what we say and express your faithfulness to the cause, we'll just kill your children. Whoa, all of a sudden I'm very faithful, right? I mean, like governments have manipulated people since governments existed. And so in the United States, it's unique in that we do have the ability to push back, but the pushback has to be done the right way and in a large enough number, or else they don't listen. They'll just continue to do things the way that they want.
Golly. What do you think? Are we going to get another stimulus package here? Are we going to get a big number 4?
I don't know, because on the one hand, I can see where it benefits people. On the other hand, I don't want things to become so expensive that it controls the people through poverty. That's one of the worries that I have is governments can control people by making them poor and dependent on the government. And so everybody has to push back on that at some point. So I'll go with Nancy Pelosi's answer. I guess it will depend on the virus. I don't know if we'll get a 4th. If we do, I think it will be very targeted. I don't know. We'll see. We'll see what happens. So, but there's always so much going on in the news and in the government that hopefully people continue to tune in and be educated and get that little snippet of information in 10 minutes or less,
Exactly. I ran a Twitter poll that I want to ask you about. I'm going to pull it up here and see what you think, if this is going to cause any kind of delays. So the Twitter poll is right here. Will you get the COVID-19 vaccine? Duh, yes was 37.1%. Yes was 28.1%. But we've got about, this is almost 36-ish% here on no, or HE double hockey sticks no. What's your take on this? Do you think this is possibly going to delay the eradication of COVID? Does this matter? What's your take on that?
Yeah, I don't know. I don't even pretend to be a doctor. I think everyone needs to make their own decision. There's multiple companies that have an option if you want to go and get a vaccine. And at the same time, it is a little bit worrisome that to have a government say we can inject you with whatever we want. Anyway, I think the people just need to decide. They need to do their research and decide, which company they want to have a vaccine from, or if they want to, and let the people make their own decision. So, but I think the majority of people are going to get a vaccine and move forward. Now, when there was that politician that wanted to tie it to getting a stimulus check, I thought that was pretty ridiculous. I can't remember who it was.
Takes away your right, huh?
It's like, I'm a big believer. I'm a big believer in agency. Give people the information they need and let them make their own decision. I think that there's not enough of that these days. We have a law for just about everything. I think on this particular topic, people just need to make their own decision.
Here, Representative Steve Stivers, Republican of Ohio, during an interview with Yahoo Finance, pressed the importance of herd immunity and said he'd be willing to sign off on a stimulus check of $1,400 for the people who take the vaccine. Wow.
Yeah.
Right. Yeah. So, okay. So the future stimulus, depending on the course of the virus, I believe with that, it's, even the Fed kind of points to the course of the virus. Do you think, Are you worried about? And I know we've touched on this, so I don't want to sound redundant on it. I just want to make sure I understand. Do you think we're going to see hyperinflation, or do you think, hey, we might see rates go up, we might see some inflation, but we don't have to be we're not going to get devastated by anything crazy?
No, I think that they'll do their very best to control hyperinflation. That is very, very damaging. And, again, at the end of the day, the Federal Reserve is going to do what's best for the Federal Reserve. And I don't think allowing hyperinflation to get out of their control is in their best interest. And so I think that they'll figure out how to manage that.
That's a good point. Okay, so no there. Gosh, okay. Any final thoughts that you have? Like if somebody was going to take something away from this in terms of like, how do I build my wealth? How do I get ahead? And obviously we've talked a lot about this. What are some of your final thoughts on just all these things tied together? Because it's such a crazy time right now.
Yeah. People are welcome to check out my book, Taming Wall Street. It's available on Amazon if they'd like. But I think that most people need to become good savers, and then from there. So I say quite often, you have to become a good saver. Like you just have to be able to figure out, how do I put money away every single month or every single year? And if you can't, then there's a broken metric in your life. You either need to make more money or lower your bills. And that can be hard sometimes, right? So that needs to be looked at and addressed, right? And then I also like to tell people that you can't save your way to wealth. At some point, you have to invest. You have to start earning interest, compounding interest. It doesn't mean you have to take on aggressive amounts of risk to get those high double-digit returns. But at some point, savings has to be turned into investment capital and allow that money to go to work. And so becoming a good saver and then an investor is important. The other thing that I like to share with my people is that what you do matters most for most of your life. And what I mean by that is, if I can be a good saver and save $5,000, right? Then that's $5,000 that I created out of my effort and my work, right? I would have to have $100,000 earning 5% to make $5,000. Well, it takes time to get to $100,000 of invested capital, right? And so what the person does, the individual does, they will be able to put more money away than their money can earn for many, many years. And then at some point they cross. And now your money's making more for you than what you can save. And that's a really good number to cross. But for most people, it takes many, many years to get to that point. So that's where I try to just say, what's within your control? How can you control your economy? Because none of us can control the U.S. economy.
Yeah, no kidding. Do you think it's possible people save too much? Do they have too much of an emergency fund, and then do they dip in the emergency fund for a vacation? I'll fill that pot back up, and basically because their goal of saving is so high, they just constantly and perpetually delay investing.
Yeah, I do think that some people can get to the point. Like for me, I know for a fact that I save more than I have deployed in investments. And it's just, again, my conservative nature, not knowing when the market might go up or down. So I even fall into that myself, but I also have most of my own wealth inside of these safe money programs. So I don't have to babysit or worry about losses. But yeah, I think that, with lack of education, people don't know where to put that money. And so then they save too much, and then they spend too much, right? And so again, there has to be a balance, right? Like you weren't born on this planet just to work, but you also can't play every day and not build some kind of foundational wealth for you and your family going forward. So again, it's just finding a balance of what makes sense for you. But yeah, I do think that sometimes people hold on to too much cash, and then by having too much cash, then they go spend it. because it starts to burn a hole in their pocket.
Yeah, exactly. You see that number there. Yeah, I'm pretty bad, and I think I consider myself to be too extreme. I keep so little money most of the time. I keep so little money, no matter what kind of income it is or lack of income there's. I keep so little money in my checking account that sometimes I'll just overdraw it, and it's like, oh, I invested too much.
Yeah.
Is that possibly just too extreme, or like, have you ever just thought? Have you ever just thought about just put it all in, and your emergency fund is selling some shares if you need to?
Yeah. No, I don't have that personality. So I think you and I have similar but different personalities, right? Where I'm probably a little too conservative and maybe you're a little too aggressive, and that's okay. I don't like to keep a lot of money in my checking account. I like to keep this mentality of, oh my gosh, if I don't go to work today, I'm broke, right?
Yes.
I keep this mentality that keeps me working, but not overworking, right? But yeah, I do think that I need to be a little bit more aggressive, deploy a little bit more. Again, I was kind of seeing like what was going to shake out with Biden's first 90 days, where the economy is going to go. Again, some of the people I follow are like, hey, I want to predict that the market's going to boom, and another person saying, I want to predict that the market's going to bust. And so because I listen to both and respect both, I've been kind of caught in the middle of, okay, so for me, I've just been thinking about opening up another safe money plan for myself, and then doing a little bit of work on our own house. I did want to clarify a few things from your interview with that other insurance guy, just because I feel like I owe it to people. Do you mind if I just share a couple of those?
Yeah, absolutely. So okay. I got 19 minutes.
Okay, I won't need 19 minutes, but so one thing that he said is these plans are terrible. They take over 20 years to get to break even. That is not true.
Let me just quickly say. So you're referring to an interview with that I did with the Ladder Life Insurance CEO. I briefly, for like 30 minutes, spoke with the Ladder Life Insurance CEO. And the Ladder Life CEO said quite a few things that a lot of people who are more familiar maybe with whole life disagreed with. So for context, for anybody just now tuning in, that's what Stephen is now going to respond to.
Yeah. Okay. So it wasn't just whole life. It was this idea of the be your own bank with a properly designed insurance contract, right? And then he kind of said some things that I'm like, I don't think that is true. In fact, I know it's not true. So, like for example, I'm working with a couple in California near where you live, and we were able to get their plan to break even in 6 years. Not 26 years, right? When he said 20 plus years, I was like, what companies are you talking about? Like, it was so foreign to me.
Without obviously names or things like that, what are you talking about? Like, what is this plan? What does it do? What does it cost? Like, teach me this like I'm 18 and I don't even know what a checking account is.
Okay. Yeah. Okay. So like from The Office, when he says, okay, now explain it to me like I'm a fifth grader.
Yes.
So
exactly.
In my book, Taming Wall Street, there we go. This is like the camera's opposite of what my movements are. So I show people how to build large pools of tax-free money that are guaranteed to not lose money, and that you have liquid access in, and you get to legally avoid taxes. And I walk them through the whole thing, right? So it's this idea of using an insurance contract in a very specific manner, not just a off-the-shelf type thing. But this guy from Ladder Life Insurance who sells term insurance, he was kind of bad-mouthing it, but then the examples he was using were not in line with any way that I build it. So I was, that's when I started texting you, hey man, that's not true. That's not true. That's not true. Are they a perfect plan? And should you put all your money into them? No, they're not, but they're a great place to place money. Usually wealthier people put money into these, but I think they're great for people at all income levels. But one thing that he had said was that it takes over 20 years for these to get to break even. And my first thought was, this guy doesn't know anything about this concept that he's talking bad about. because I can get people to break even in 6 or 7 years. What that means is you have an equal amount of money you could borrow compared to what you've put in. It also means that you've paid off the insurance contract for the rest of your life. So the costs are now basically paying for themselves, or they're done for. And that was not explained in that interview. The other thing that he said, oh, go ahead.
This is like life insurance. This is all about life insurance, right? So when you're talking about insurance contracts, I'm paying for this, is what you're saying.
Yes, it's like a life insurance plan that's designed to be more like a Roth IRA, but without the income limitations or the amount of money you can put into the plan limitations.
Okay. So give me some numbers here. Let's say I'm like, yo, sign me up for this. Okay, this sounds good. I don't want to pay taxes and I don't want limits. Okay, what do we do? Like, do you just tell me how much do I want to invest every month, or what?
So with most people, I figure out, okay, how much is it that you want to save in this particular program? And then I build the plan, not around death benefit, but about maximizing the cash that can grow protected and tax-free for them, right? And what I mean by there's no limitations is, let's say that I get a doctor on the phone that makes $400,000 a year, and he wants to put $50,000 a year into this plan. Well, if it's a Roth, he can only put like $6,000 into a Roth, right? Yeah. And because his income is high, he can't put any into a Roth. And so then he needs something that functions like a Roth, but still gives him liquid access, right? So he's able to tap into that. So I have clients that range from a couple $100s a month up to my biggest client, which puts $250,000 a year into these plans, okay? So we put money into the plan every single month, and it's building your death benefit and it's building cash that you have liquid access to, okay? So unlike a 401k where I can't touch it till I'm 59 and a half, as soon as I have cash value in the plan, I have access to that cash value, okay? So from there, we let that grow over a number of years, and then you can start using the money in your plan to your advantage to buy your own cars, to do real estate deals, to do hard money loans. I paid for all 8 of my books that are on Amazon. I independently publish those using my own plan. And so you can use that money to your advantage over the course of your entire life. And as the money grows, you don't pay any tax on that money, right? So imagine you've built $1 million into this and it earns $60,000. You don't pay tax on any of that $60,000.
Where does that money go? But I don't touch it, right? It goes into the plan.
The money is inside the insurance company's general fund, and they're investing it on your behalf, but they're also contractually guaranteeing that you'll never lose money.
Well, where the 60K dividend, essentially, say 6% on $1 million, am I getting that as cash, or is it going back into that plan?
It gets reinvested into the plan, but you have liquid access to it.
So if I have liquid access to it, that means I go in, let's say I got $1 million in this plan, and I'm like, look, I got to take 40K out. Something came up. Am I paying fees on that? Do I pay taxes when I touch it? Like, what happens there?
Okay, so this is something that the latter guy said. He said, they're going to charge you interest for your own money. That's just stupid, right? And I was like, okay, yes, they are charging you for your money, but they're also allowing that same amount of money to continue to earn interest internally as if the money were never gone, okay? So I'll give you an example. I have a plan that when I borrow from it, they charge me 5% simple interest, but internally I'm earning 5.5% compound interest. Okay. Right. So if I borrow out $100,000, then I am going to owe $5,000 at the end of the year. But my plan, my whole 100,000 continue to earn 5.5% as if it were never gone. And guess what? I paid back at simple interest, and I got to earn tax-free compound interest, okay? The other thing that he said was, 5, 6%, that's nothing. That's nothing to a lot of people. Well, inside of a tax-free vehicle, that's equivalent to earning 8% in something that's taxable. So
now, is it just taxable on death?
No, it's not even taxable on your death.
Okay.
So if I die,
so the reason you're saying it's tax-free is because the money's in there. You're not actually taking it out because you're just taking a loan out against it. And it's kind of like when I take a loan against my house, that's not a taxable event. Borrowing is not a taxable event. So that's why there's no tax. But at some point, so either I'm guessing if when you die, are your children then getting a stepped up basis? Is that's how it's not taxable, or what's happening?
So the Supreme Court in the early 1900s decided that death benefit from a life insurance payout is not taxable. Okay. So for example, my father died this year from cancer, and I helped my mother to collect the death benefit on that. She paid $0 on that death benefit money.
Wow.
Meanwhile, the money that came from his 401k from the place that he worked, she owed about 40% tax on that 401k money. Okay. So this is why the wealthy buy into these plans, is because they want to legally avoid taxation. And under the current IRS tax code, it's not a loophole. It's nothing illegal. It's in the tax code. They just happen to know the rule that allows them to build that money tax-free, distribute it tax-free, and then pass it to their family tax-free.
Okay, so what happens if you have this whole life plan and then you say, you know what, I don't want it anymore. So you want to close it out. Are you paying taxes at that point, or fees at that point?
It depends on the year when you cash it out. I tell my people before they buy, if you don't want to own this for your whole life, then we don't want to do this, right? Like I'm not in this to make a quick buck. I'm in this for the long haul with my people. So, but yeah, it depends on when you cash it out, right? Like let's say that you put 50,000, or let me use a smaller number. Let's say that you've put $20,000 in over a 10-year period, and now your account is at like $28,000, right? Well, you would pay tax on the 8,000 because it's 8,000 above how much you've put in, right? But let's say in like 2 years in, you've put $4,000 and you have 3,000 of cash value. Well, you would take $1,000 loss, but you also wouldn't pay any taxes on that, right? So it depends on when you exit and how you exit. But I don't build my plans for people to exit.
Yeah, no, that makes sense. That's interesting. So I think the big argument that some make is that, like you had mentioned, maybe what they're investing in. What is it that they're investing in? Is it just the life insurance companies investing in indices, or where are they putting the money?
So most of their money is in corporate-owned stocks and bonds, mortgage-backed securities. They do private lending with banks. They also do a lot of commercial real estate projects. They're doing very safe things that are backed by some kind of physical asset. And the reason that they do that is there's something called the reserve system, where these insurance companies have to have the money to pay out, where a bank uses something called fractional reserves, where they can lend out $10 but only have to have one of those dollars at the bank, right? So that's not how the insurance world works. Otherwise, it wouldn't be insurance, it would be gambling, right? So anyway, just to clarify what he said, it does not take 20 years to get to break even. Do you pay when you borrow the money? Yes, but they make up for that by allowing you to earn internally. And so it ends up, and I can mathematically show that as well. Then the other thing he said was, some of these guys earn $30,000 commission on one of these whole life plans. Well, guess what?
Yeah.
I ran some numbers, Kevin. You would have to put in $1.2 million over a 10-year period to get a $30,000 commission. So when he said, you're basically buying your insurance agent a new car, I was like, what plan is he talking about? Like, and you would have to put such a ridiculously large amount of money in, right? But if you sold a $1.2 million house in California, somebody just gave you a really nice commission, right? So like there's money that's made in this. Nobody denies that. But when he said $30,000 and you're buying your agent, I was like, how big does a plan have to be? So I just went and reverse engineered it in my software. 1.2 million over a 10-year period.
Wow. 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 Okay. Oh, well, this is really good clarity. So what is it like? What is this called? This is whole life, right?
Well, so there's Index Universal Life. There's also participating dividend paying whole life. But again, it comes down to how you build the plan. If you build it for death benefit, it's going to pay a large commission and it's going to suck up a lot of money in fees. If you build it for the cash value and the banking, it's going to cut the comp by about 80%, and it's going to allow it to get to break even in about 6 to 8 years. But then all along the way, you have access to that. So do you mind if I give an example of how I've used it in my own life?
Go for it.
Okay. So I borrowed some money out of one of my plans. Let's just say $100,000 to make it an even number. Okay. So I borrow $100,000 out. I went and did a hard money loan backed by a piece of real estate that I had my name on title, and I made 12% on that deal, right? So at the end of the year, I made $12,000 in interest, and I paid $5,000 in interest. So I pocketed an extra $7,000 of income, right? But internally, I still made $5,500 of tax-free money on my money. And guess what? Because it was a real estate related loan, I got to write the $5,000 off on my taxes. So I got to pick up an extra tax write-off. So for me, I was like, this makes so much sense. And guess what? If I die and I don't have time to build millions of dollars of wealth for my family, this immediately creates that estate that takes care of my wife and 3 children.
Wow.
So again, is it for everybody? No. Should you put all of your money into this? Probably not. But is it a legitimate way to build tax-free wealth? Absolutely.
Oh man, I'm going to have to ask you to send me something on this. So, how do people get in touch with you, and how do people follow you?
Go go to YouTube and search Stephen Gardner, and this ugly mug will pop up, and they can hit the subscribe button.
Oh, I think that's wonderful. Wow, this was a blast, man. We have to do this again sometime. There's so much we covered here, and I feel like there's so much more to talk about.
Yeah, well, now we need to get you on my channel.
There we go. That's where we'll pick it up.
Yeah.
Awesome. Well, follow Stephen Gardner. Thank you so very much for being here. Stand by for one moment. Everybody for watching, consider liking, sharing, and subscribing. Once I hit end on this broadcast, you'll see a little redirect for the next live stream with Ross Gerber. So come join us over there. We'll see you there. And thanks for watching.